The national mortgage repayment bill has increased by more than 100% in the past year, from $11 billion to more than $22 billion now, heaping additional pressure onto homeowners. Joining us now, Executive Chairman of Yellow Brick Road Home Loans, Mark Bouris. Mark, on this, property prices also still going up and up and up, always up it seems, despite increased interest rates.
Yeah, but that's not a function of affordability of home loans. That's a function of not being enough property available for sale, and there still being a reasonable demand by people who don't have debt. Because, let's not forget there's 1/3 of the population have no debt, but they still got a property they can probably go on mortgage and borrow some more money to use that as equity to buy another property. In other words, buy a rental property. So the investors are going mental in the market, mate. They're buying everything and they're charging the biggest rents they possibly can.
I did notice with interest a piece in the AFR last night. I was reading, Mark, that there's a few more properties starting to come online. It's getting ahead of the spring season, which is earlier than usual. I mean, is that what do you put that down to, and is that the case?
Yeah, well, the general indicator, at least here in Sydney, is that when we used to have magazines, is that the local magazine in the local area, whatever the News Limited ones were, for example, the Wentworth Courier, for example, used to get really thick around the end of August, but we don't have those magazines anymore. But the big indicators are coming out of the realestate.coms and the domains of the world, who are getting early bookings for the September period. And a lot of the real estate agents are telling me that they're all started seeing a lot of loading up of vendors for properties for that spring campaign.
Is it?
So there's been a lot of people around, mate, who've hung out saying, maybe we'll get more money if we wait a month or two, because the property price is up. But
I wondered if it was that. Sorry to interrupt you there, Mark. I wondered if it was that, investors looking to, to get a good deal, or whether it is, as we've been talking for months now, people are they've got to get rid of their property. They can't afford to keep up with expenses.
I think there's two things. There's exactly right. Two of those things are existing. The first thing is everybody's been feeling a little bit buoyed that property prices are still going up. So maybe if I hang in a little longer and I'll sell it into a better market. That's the first thing. But that won't last forever. And at some stage they're gonna bolt. And the second thing is the fixed rate loans are all coming off, and people are starting to panic, and they're starting to say, hang on, we've got to sell soon. What they've got to be careful of is they don't all try and sell at the same time, because then we're going to have a flood of properties, and then the supply of properties is going to be reversed of where it is at the moment, and property prices by definition will go down because the demand's not going to go up.
Yeah. Hey, a topic du jour for us this year, Governor Philip Lowe, his speech today, will it be his last as governor?
I'm like, I guess you can get a bet on somewhere. I would say yes. I'd say it is his last speech. I mean, I actually just think from the language he uses, he expects it to be his last speech. And I think the Labor Party are going to want to put in place a different structure, which is what governments do, which is fair enough. Yeah. They're going to put in a structure which includes not friendlies, but people more aligned to their values. And I'd say this is one of the best opportunities that they've had for a long time to do so.
Big Four Banks is finally here under the spotlight today in Canberra, Mark. Will you be showing any interest in that?
Yeah, absolutely. Because I just think it's important that consumers know, or people who put their money in deposit, know why the interest rate rise cycle hasn't been reflected in the deposit rate they get, particularly for short-term deposits, these cash.
So are they being sneaky there, do you think?
Well, to be honest with you, Pete, like if I was running one of the banks, I'd be doing exactly the same thing. But they're not obliged to put rates up in lockstep with the Reserve Bank. What they're obliged to do is look after the shareholders and make sure that the margins that they lend at, in other words, the difference between the deposit rate and the lending rate, is sufficient to give a return to shareholders. So that's probably their obligation. But if the Parliament wants to inquire and sort of put it out on paper and let everybody know about it and let it come into the news cycle, fair enough.
Now, I know you get up early in the morning. You go to the gym at 4 in the morning. Have you been today already, Mark?
Yes, mate. I got up I couldn't sleep last night. I had a few things on my head, and I was rolling around about 3:30, 3:45, and I just stuff this. I roll out of bed and go straight to the gym and had a good work.
There you go. Oh, you're already done.
So you comb my hair.
So you're working my hours. You're working our hours here at First Edition, Mark Bouris.
I'm working but not getting paid for it. Not like you, Pete.
Good to see you as always, Mark Bouris. Thanks for your time. We'll talk to you again next week. And back to the Governor. He's up at 1 o'clock this afternoon, folks. That's that major speech, and we'll be carrying it live here in full on Sky.